We have more to come, but let's switch over to you, Stephen.
Well, thank you. I'm humbled and embarrassed at the same time, and appreciative. So, Eddie, what can I say? This is such a great group of people that we learn from each other all the time. So I'm happy to be a part of the contribution to it. But there's an advertising great named Phil Dusenberry who worked for BDO, and he came up with the G brings good things to light and all that, the big themes. And his whole concept was one great insight's worth more than 1,000 good ideas. And I think what this community has done is provide insights on so many different areas with so many different perspectives. As Zach said, getting the views from around the world, and what happened last week with the discussion with the Ukraine, and we get somebody from Ukraine calling in the middle of it. That just doesn't happen in other communities. So it's a tribute to this group. And if we've shared one or two insights, we're happy to do it. As Mark said, I'm blessed to be working with 19 incredible individuals and 4 investors: Sean, Nitin Suchetti, Arnold Schmeidler, and Ross Taylor, who are just aces. So 90% of what you get from me is theirs, and about 80% of all the mistakes are mine, particularly the ones that came in the briefings around inflation. So we were a little out of bounds on that one. Fortunately, our portfolios were well positioned. So, Vanessa, I'm going to try and grab the screen and hopefully get the 100th one to go without much problem. So.
Well, Jesus, has everybody ordered lunch?
Yeah.
No, yes.
And then we'll get it in. Thank you.
Thank you.
So the world's changed forever, I think, with the conflict in Europe, and it's too soon to know what the consequences are going to be longer term, but nearer term, we're feeling it in a lot of different places. So what I want to do is kind of bounce around and give you our impressions on what this means and where some of the investment opportunities lie. I'll start with the good news, and it's hard to say that the pandemic is good news, but it's certainly, as you can see from the chart, we're really well further away from where we thought we were going to be at the start of the year, and really moving to a post-pandemic or endemic state, and that will allow some of the things, pressures to ease off the system. It'll also allow a reorientation of the focus to the new pressing issues that have arisen out of the war in Europe. But this is a bit important change, and we don't talk about the pandemic quite as much as we did a week or two ago. But I think as we see this go around the world, that has a big element towards easing some of the pressures on growth that had existed for some time. So big changes here, and I don't think we can shortchange what the impact of this is. And it's not just the U.S., it's happening in a lot of other places. I will say we do have some concern about China, and as they come off their zero COVID policy, what that means for where we are. But right now we're in a more positive state. Back a year ago, April 30th, we did a briefing up from the National Intelligence Council. It was on the future, the vision of the future and the key themes. And I shortened it up to just highlight some of the issues that were raised there. But one of the big ones was fragmentation and the strains that were developing within communities and within the international system. And you're seeing that come to fruition with the aggressiveness in Ukraine, and also what's going on still in the South China Sea and in the Middle East. So we still have those strains. And one of the things that they pointed out in the report was that the transformations were exceeding the capacity of the systems and structures. And I think we got hit with so much over the last 15 years that the global economy was working together, then not working together, then coming back and working together, and now we're not working together again. I think it's created a lot of strains. And so when we go back to that briefing, and Mark, if you recall, we spent a lot of time on that one where people weighed in a lot. I think what you're seeing now is a lot of the implications of that coming to bear much faster than we originally thought. And one of the big ones is this, major powers positioning to create new rules and exploit them. And I think what Russia's doing is exploiting it. I think what China's been doing is trying to create new rules in a more balanced global system that shifts the power away from West dominance to a more balanced view. And I think this is one of the things that we're kind of dealing with now. I think what we're going to have to see is what the outcome was that they were predicting. Is it a bifurcated world, or is it one that maybe the leading economies figure out is a better way forward. And I think we're going to be going back to their themes quite a bit over the next year or so. And then a couple of weeks ago, we talked about the big risk for 2012 from the Socroft Group, and what they were highlighting, Russia attacks Ukraine was number 3. Oil tops $100 a barrel was number 6. Number 8 was a bifurcated world emerging, but it's not the repeat of the Cold War. We think this is going to be a very different new period that we're entering into, and the food security issue is on the rise. And I think coming out of this, well, as Rich Sobel highlighted earlier, while a lot of the focus is on the energy security, I think the food security is going to be the one that has a bigger immediate impact. And has been highlighted, it was what led to the Arab Spring. And I think we've underestimated going into this the role of Russia and Ukraine in the food system for the global system. And the strains that are going to pick up are going to unfortunately go back to the least advanced countries first, and particularly a lot of the Middle Eastern nations that had the food problem that started the Arab Spring are going to be most impacted by this. So that's going to create another area of conflict that we're going to have to deal with. So started growing, and after the 20 and rebound in 19, it was going to have to slow down anyway. The economy was overheating. This is going to exacerbate the slowing and could have between a 1% and 2% impact on growth, which is meaningful in a $90 trillion economy. Even though these countries are small in GDP, they're about 2% of global GDP. When you combine Russia and Ukraine, it's going to have a much bigger impact. And I think the biggest impact is going to flow to Europe initially, coming out of where they were starting to come back out of a really tough period. We're going to go back into a tougher period. So I think as we look at it, the shift from globalization to security is going to be one of the big changes. You're going to have a whole different alignment of nations, and you're looking at China and India right now trying to figure out how do they play this to their advantage going forward, or what's the best outcome for them. And I don't mean playing it to their advantage as a pejorative. I mean, they're sitting there as a leader. How do you deal with this issue, and how do you work when Russia is a strategic alliance to China, but it's not an economic importance to them the way it is. And there's some long nationalist challenges with conflicts with the border there as well. India's kind of stuck in the middle of it, where they're fighting with China, but they need to figure out how they play in this new world order. And I think that's going to be one of the big issues we're going to be faced with. I think the sanctions, we haven't figured out what the consequences are of that. I think they were much more aggressive than people thought. And I believe that the ability of the Western powers to put such a powerful and punishing sanctions in place was a surprise to everyone, and it applies to Russia and China. Unfortunately, the impact of that on the Russian people is going to be devastating, and I believe that many of them, if not most of them, had no interest or no awareness or even involvement in what's going on, and they're going to be bearing the brunt of this, to say nothing of the tragedy for the people of Ukraine. So I think that's going to be there's unintended consequences there. I think there's unintended consequences around the role of currencies and the role of the dollar going forward.
Hey, Mark, Steven's muted.
How about now?
Yeah, we got you.
You're back.
Are you, is the phone, no, it's you saying perfect? Everybody can hear?
Okay.
Yeah,
Can someone speak so we can hear you?
yeah, you're back.
No, we can't.
Yeah, you're
I don't
back.
think you're speaking dialed in.
You hear us?
You're back.
Not now.
Okay.
Yeah, we're good.
Here we go again.
Mark, you're
All
good
good.
out of here in Ohio. I don't know about other
Go let
places.
you That one in then. It's just one in the number.
One moment. What number do you start with? What?
Just a one.
One. So.
You better remember his last sentence.
669? Yeah. Yeah, 900. Yeah, 6833. Come here, 6833.
This has never happened in the 99 prior times. And the only explanation is it's March.
Welcome to Zoom.
Good.
Enter your meeting ID followed by pound.
361. 3601.
All right, Jack, we're gonna edit this out.
I can see even though.
No, we're not. No, we're not.
Enter your participant ID followed by pound.
No,
Otherwise, just press
this is
pound to
priceless
continue.
for the 100th time.
You are in
This
the
is
meeting now.
excellent.
There are more than 50 participants in the meeting. This meeting is being recorded. You are muted. You can mute or unmute yourself by pressing *6. You are unmuted.
Okay. Can you guys hear us now?
Yes.
Yes.
Okay.
Back.
We heard you the whole time.
Oh,
We couldn't hear you.
all right. So I was just getting to the sanctions and the impact on currencies. And I think we're going to, aside from what we saw, the devastation of the Russian ruble, I think you're going to see a push to reduce the dollar's exposure around the world longer term, but in the intermediate term, the dollar is strengthening quite a bit, which is going to put greater strains, and that's one of the unintended consequences for the dollar debts, particularly in the emerging economies. That's going to put more strains on them at a time that they really can't afford them. So I think that we don't know what the full impact of the sanctions are going to be, but it is the severity of them is changing the calculus politically, economically, and socially, I think, as we go forward. Supply chains that we're starting to ease are now being faced with a different supply chain issue, particularly around energy supply chains and also materials as well as food. I think the inflation calculus has changed, and we're now moving into, in our view, certainly a slower growth and higher inflation. Whether it becomes a full-on stagflation or not, we're going to have to see how that plays out. I think the immigration issue is going to rear its head again, and I think that displacement is going to be pretty significant. Right now, it's about 1.5 million people. They moved into 1 million of them or so have moved to Poland, but as countries get overwhelmed by immigration and displacement, it's going to create bigger problems, and it also will lead to some significant economic scarring. And then lastly, the playbook that we've used for the post-Cold War period, you have to throw out. The rules don't apply anymore, and I think we're in a very different period. So let's touch on some of the areas that are going to be most impacted. There's ways to be a successful investor in an environment like we're in with slow growth and pockets of inflation, and that's to go where the required spend is. And that is not an index strategy, so active management, whether you're looking at a private portfolio or the public markets, is going to matter. Just to give you a sense of the opportunity, the defense spending as part of the S&P, aerospace and defense, is only about 2.4% of the S&P. The market cap weighting of the leading defense companies in the U.S. is about between $500 and $700 billion. So if you think about that as a allocation and exposure, if you're BlackRock, you could own with 5% of your assets 100% of the U.S. defense industry. So it's a scarce asset to have these companies. And you think aerospace, as part of aerospace and defense, is probably 40 to 50% of the market capitalization. You're really looking at a much more narrow group of investment opportunities, and a lot of money is going to have to chase it. And you've just heard from most of the European nations that they're going to increase their spend by 1 to 2 times what they've already been spending, and that is going to be significant, and it's going to chase a lot of scarce resources, because a lot of rare earths go into the equipment we use to protect our nations. And defense is now not just land and air, but it's actually going to be space and cyber, which is going to create even more demand and more money flowing. So investment opportunities abound in that area. The other one is energy security and the role of climate change. And as Simon Littlewood pointed out, the need is immediate, but the ability to get there is not. And this is going to create, and you can see the energy sources by supply here. Coal has come down, but the oil and gas is not coming down materially as you go out in the future. And we've actually shown charts that it's going to pick up, and you're going to have oil and gas continuing to be major parts of the system. So finding ways to do it better and cleaner is going to be an important element of that. But then you have the grains and energy. Look at the spike, and you can see this in the commodity index, and this is only through the 4th. And we know the last couple of days, you've seen both of these spike up more. And this grain issue is going to be maybe the Achilles heel that comes out of this that we find is going to cripple the global system to some degree. To what degree, we don't know yet. Everything is too soon to be making definitive statements other than inflation is going to be higher because you're already seeing it happen immediate. I think this refugee crisis is going to be a major issue, and it's going to create a lot of strains on governments, particularly in Europe, that are already under a lot of strain. So I think that's going to continue to be something that pushes forward, and it relates to the future of work, because what happens is after you get through the initial crisis, then people go back to their day-to-day stuff, and if they're not seeing a rise or their day-to-day lives are being impacted negatively, they lash out. And that's what we saw in Europe following the Syrian crisis where people are flowing in. And when you have unemployment at a high level and the economic problems that I think are going to really shift to Europe from Russia, I think you're going to start to see more tensions in that area. And that balance of balanced budgets for the European nations and how they play all that out, there's so many competing forces that it's going to put a lot of strains, and stuff is going to get choked off. So where to put money to work today? To say the Russian economy is under great distress is an understatement. I'm not sure we know what's going to happen there yet, but the pain and suffering that's already been inflicted, and the companies moving business out, and if you start adjusting the energy flow to Europe in a more material way, I don't see how they come out of this in any short period of time. We've locked up almost 60% of their reserves. If you think the Saudi Arabia was spending about $35 billion of their reserves to deal with the problems that they had on a monthly basis, you don't have a lot of reserves to run down if you get to that point. And that's when the population really starts to react, and then the suppression starts to get bigger. So how that tension plays out in Russia, I think, still to be determined, but it's going to be hard for companies to go back into relationships very quickly with Russia, and I think that's going to be really disruptive to a lot of European companies, but I think it's also going to be disruptive to any global multinational player. So that's a big issue. I think the odds of a recession in Europe have gone up materially, and I think the issue of how they transition and how much pain they can take to deal with the energy transition they're going to have to make is undetermined, and that's going to put even more strains on governments and actually worsen the budget. So I think more money is going to have to go in, rates are going to have to stay lower as a result, and more stimulus is going to have to happen, and cheating to the targets that they had are going to have to change. But I also think this puts the European governing institutions in a very tough spot. They've always been in, from the time the EU was created, it was flawed structure, and to get that structure to solve the needs of the greater European system, as well as the individual countries, has always been in conflict, and I think that conflict intensifies, putting more pressure on leaders, and it's going to require them to really lead and to have a rethink, and how they can push their population forward is going to be a big element of that. The net of this is China and the U.S. are going to be where capital flows and where growth is going to happen, and China is doing very smart, targeted stimulus. They're going to manage for stability. They are going to be very inwardly focused while stepping back from what role they play around the world other than where it helps them strategically. They're not going to be the world's banker like they were coming out of the financial crisis, and I don't think the U.S. can be to the same degree financially. We have a political issue with that, and I don't think we have the leadership support for it. But because of that, I think capital flows to the U.S. some to China from the rest of the world, but I think a lot of the West is still trying to figure out if China takes action in Taiwan, do they want to be in a position like they were with their exposure to Russia when China is a much bigger part of their trade and activity? So it creates a different dynamic that you're going to have to really thread the needle to avoid a big global problem. And so we think all investing is much more difficult. You want to focus on quality and focus on the needs, and you can make money in these environments. Our firm was very successful in the late 70s when we had a high inflation period with high energy prices because we focused on the areas that were going to benefit from it, which was the energy producers. In the early 2000s, when U.S. growth was slow and we were coming out of the tech wreck and all that, we made a lot of money by focusing on energy industrials materials as China and the emerging markets were taking off. We think in this environment you can do the same, but you have to really be much more focused on where you put capital. So technology's got to be the key to deal with the issues because we can't solve problems as big as we have without increased spend on technology, but there are limits there with supply chains, particularly around chips. You're going to see a bifurcated global economy when it comes to supply chains for chips, and as Taiwan becomes more of a focus, we're going to see more money move, more supplies move to domestic areas. We're seeing it in the U.S. and Ohio and Arizona with those areas. I think defense companies are not an easy way to make money. You really need to be there pre-positioned, but they are an important element of it. And we're going to have to see more spend go there. That'll be public-private partnerships going to have to pick up there. Energy has been talked about a lot. Obviously, it's going to attract a lot of money, both fossil fuels and renewables, because that transition is going to take much longer. Essential commodities, as Sean pointed out earlier, are going to be even more important, and you need to get ahead of that. And we're going to have to change our mindset to the balance of environmental issues that come with these important assets, and how you mine for them cleaner and better and more efficient. But there's a scarcity issue, and if you go back to the Civil War in the U.S., you could see boulders of copper above ground in the U.S. You could get copper virtually anywhere you walked, and it was massive stones that you don't have to mine. Now we've taken all the easy copper out of the world, and the copper demand is, as Sean highlighted, is tenfold for electric vehicles. It's going to continue to grow. That's going to make it more difficult, and it's sourced in areas that are not the most environmentally friendly or socially friendly areas as well. We think select industrials are going to be a big part of where you want to play in this area. The steel industry is going to be a key element of it. To get, the wind turbines, as Sean touched on, is going to require a lot of resources, and that's going to push a lot of money to it. And then this environment for us, we can see rates moving up, but you've already seen the Fed announcing they're going to start raising rates and the 10 years come down. We think that's a dynamic that you're going to see of the U.S. is a safe haven with a higher yield. It's going to suck a lot of capital out of the rest of the world, which is going to create additional strains on the rest of the world too, which is one of the key elements that you have to fight. But you can get, nice, healthy, attractive, stable dividends of 2 to 3%, not stretching for yield in an environment that, the German 10-year of the Bund is flat now. Maybe it's negative. I haven't checked today. But you're going to be starved for yield as well in this environment. And whether you find them in the private credit area, I think there's some interesting opportunities. When Howard Marks is looking at going into Evergrande bonds, you can find opportunities in the distressed area if they have the right. It's in the mind's eye right now, Ann, but I'll try and rewind.
Some things you can't take out.
Yeah.
No.
Yeah, I'm not sure. So listen, the opportunities are going to be narrow. I think you have to focus on it in that fashion. And I think this is a game changer. And a lot of times we say things have changed. We thought the pandemic was. I think what's going on now is going to be more long-term and more impactful than the pandemic issue was. And I think it's very important that we really start with a fresh mindset for how you're going to invest money in this environment, because this world is quite different than we've lived in for, in most of our careers, and for many, they've never lived in this type of environment. And I think what's changed for us is the persistence of inflation with this new round of pressures coming from something that is not transitory. The pandemic, you could argue whether Fed was right or wrong on transitory or not. That's not worth the debate. Inflation ran higher. It doesn't matter now. We're in a more permanent state of higher inflation around energy and food, which unfortunately the central banks can't control. And that's going to set their compass for how they raise rates, because you can't do what Volcker did, and bring this inflation down. The situation is very different from that. So the Fed's going to be more measured. Europe's going to have to actually be less aggressive on raising rates, and they're going to have to keep the accommodation going. The benefit for the system right now that's not being talked about as much, and it's something we've talked about in almost every briefing, is we have an overstimulated system right now, and that'll help offset some of the inflationary pressures as that comes down. It's going to help carry offset some of the slowing of growth and allow us to ease some of the problems but not eliminate them. And I think this is one where the markets could go down more. We're not at a point where, from a technical perspective, we bottomed. I think you're going to see some companies still take it on the chin, but keep in mind, if you've gone into the index, there are a lot of companies down 50 to 70%. I'm not sure the percentage, but I think over 80% of the companies have had over a 10% decline already. I think when you go to 20%, it jumps to like 40 or 50, and then when you have a bigger decline, it's a pretty significant number have gotten the 70% hit. So there are opportunities to find right now. You just have to have a different mindset of thinking that the world has changed forever. I don't think there's any other way to describe what's happened when you're in war in Europe again. So I'm going to stop there, Mark, and happy to open up for questions or comments or input from around the world.
Stephen, two quick things. I'll just ask them both and then let you talk. One, Russian central bank reserves, I think about 30% are in renminbi.
Mm-hmm.
And I'm not sure China's trying to cut them off the way the rest of the world is. So I don't know if that's an outlet. They're already moving to union pay for credit cards, and so how much is China going to be able to ameliorate some of the problems? That's one question, and the other one has nothing to do with that, is that you talk about rates. Personal opinion, the only reason you can have the S&P 500 at a P where it is because rates were zero and now negative, but that was under zero inflation environment.
Mm-hmm.
Now with a positive inflation environment, which you don't think is going to end, I don't know what the right price for the market is, but to me, you could cut it in half and you'd still be at fair value. So
I don't know.
Where are both those things going?
I don't know that in half is the right number, because if you think about, but just think about it from an absolute basis, right? Between zero and where rates were historically is probably a 5% gap, right?
Well, I'm talking about.
Short rate?
No, well, I'm saying, just use the 10-year because it affects more things than short rates. But if you take a P ratio of 15, that's about half of where the market is. The S&P 500.
Not now.
If
Now
you
it's
look,
19.
Andy,
Well-
yeah, so Andy, also the equal weighted valuation of the S&P is now down to 16. So you had a lot of that
Yeah.
pulling on the valuation
But
already.
what I was about to say was, not really a P ratio guy. If you look at it on an earnings yield basis relative to rates, then it was the right price. And earnings are still pretty strong.
Yep.
Yeah.
You know, so that to me is what matters more than P ratios.
Yep. Unless you're an index investor.
I don't want to.
I'm just saying.
Sorry, I spent 12 years at State Street. I don't talk about stuff like that. What I'm trying to say is that in a zero inflation environment, that's okay. But whether rates, the 10-year goes to 2, 3, 4, 5, you don't have a zero inflation environment anymore. So if you're discounting earnings from sometime in the future back to now, the market shouldn't be where it is, my opinion.
Yeah, I think your evaluations are absolutely, we're out of whack because of the zero interest rates, but you've seen the damage in a lot of cases come down a lot. If you look at it, you know, we've had probably a four-point turn on the PE multiples if you're following PE multiples. So there is a lot of damage has already been done. So I think it's definitely going to be a much harder environment, and you have to focus on quality companies and quality earnings. It's not for everyone. To your first question, if the damage done to the Russian economy by the ruble and by 20% interest rates, which are really actually much higher, I think, is when you're actually trying to buy stuff now, is so significant that that I don't think China alone is going to solve the issue and the renminbi. But when you can't access, 60% of your reserves and you're in financial problems, they need that money. They're going to need that money to fund their country, fund a war. And, so that's choking off money that's going to go to other areas, and they have to feed a population that's going to be really under stress while they're, dealing with all that. So I don't think that solves Russia's problem.
I'm not disagreeing with you.
Yeah,
it's just a thought.
there are two other questions, well, lots of questions, there's two raised hands. Ann, do you want to, have a question?
Oh, no, sorry, did I accidentally raise my hand?
No, Ann
No, I'm
Mooney.
enjoying the
Yeah.
discussion, but I don't think I.
Ann
I think I
Mooney.
did.
Oh.
Yeah.
Yep, Ann Mooney.
Okay, great. Hey, Stephen, first of all, I just want to say thank you. It's just unbelievable, I think, what you do for 361. I mean, you are an anchor for this 361 family and the foundation for the mission around learning and knowledge sharing. If I had to nutshell it, I'd say you're the trifecta of an amalgamation of three bastions: Walter Cronkite, Cal Ripken, and Warren Buffett. For me, I mean,
They're
that's
all rolling over in their graves.
that's saying something, dude. That's a high base, and I say that I really thought about that, and I think for me, you've provided unparalleled synopsis of very complex global matters that have expanded my knowledge and my perspective, and just simply made me smarter. So for that, I really appreciate it, especially when I go to cocktail parties. I can just drop a few of these little nuggets. So thank you, man. And you're a good guy and fun to be around, and make me want to be a better person too.
Thank you, Ann. Really kind. Too kind.
And I did have a question. So the question is around, you said the U.S. is going to attract capital. Say more about which industries and why, and how you're thinking about it for the ARS portfolio.
Well, the areas I have up on the board are areas we were invested in before the attack. We had been very heavy on tech for the antidote to inflation. So we think tech spending is really the key to getting out of most of our problems. Innovation is going to drive us. We were very heavy in defense companies in our all cap strategy. I think we were probably close to 10 to 12% exposure to defense when the S&P would be about 2.5. So we were really focused on being exposed. That hurt us last year, but it certainly has been the right positioning for this year. We actually increased our energy exposure starting about 6 months ago. We were very much playing the EV plays through tech and through the autos, but we really increased our exposure. We're probably 1.5 times the benchmark weight in oil and gas companies, domestic, mainly looking at the Chevrons, Pioneer, EOG as the opportunities for us there. You could pick any one of them right now and do pretty well. The essential commodities was something we caught on early. We had been investors in Molycorp back when it failed the first time, so we were familiar with it, and a lot of your best judgment comes from your worst mistakes. But we were aware of the need and aware of the restrictions on that, and we were also big investors in Freeport and other copper companies for a long time. Our history as a firm had us very heavily into commodities. We were subcontractors to the Carter administration on the energy needs of the U.S. Unfortunately, we never came out with a policy other than right on red and 55-mile-an-hour speed limit, which, as we know, has failed us miserably. And then we've been big in the dividend area. So we've been covering these areas for some time. I think the biggest shifts we made was reducing the high multiple stocks out of the portfolio because we saw with rates rising that they were going to get sliced, and they have. We think there's more pain to come for some of those companies, so we've continued to reduce some of those exposures. And we've also avoided the really low multiples because we think they earned it and are going to have a hard time getting out. So that's how we're looking at it. I think there are opportunities, but you don't want to be in everything right now. And while indexing is a great strategy for the long term, if you have it, I would reduce my index exposure and increase my active exposure because I think that's going to play out. I also think in the private space, we talk about the multiples impacting the public companies, but I think you're going to have a reset of how you look at valuations in the private space as well. Free money is free money everywhere, and when it stops being free, it matters. And I think we're going to see some regime changes going on in how free people are to throw money at all investments in this environment. So I think that's a big change coming.
Adam Blanco?
Stephen, thank you. And congratulations on your 100th presentation, and quite the honor to be Zoom bombed, I think. That means you're attracting attention. My question, we're going to the US will attract more capital. Is that a purely a flight to safety and a temporary attraction, or is this more permanent, more long-term? And how is that going to impact interest rates and inflation?
I think I don't think it's necessarily long-term, but it will depend on how the war shakes out and whether we move to a bifurcated world or one that really has the US and China finding a partnership where they coexist to kind of lead the world, which I'm not sure either country would find palatable, but is probably the best thing for the world right now. So I think that it depends on the outcome for that, whether it's more permanent. In this period, though, we're absolutely in a time where we are going to see capital flow to the US for yield, for safety, and also because of the quality of the companies and the rule of law gives you a higher confidence that you can invest here. One of the challenges for investing in China started last year with the government getting involved in so many different industries and going after their leading companies. That made people a little hesitant whether that's as good a place to invest. And now what you're seeing with companies just pulling out of Russia completely is going to rethink where you're putting your assets. So I think that all those things play into where capital is going to flow. I think our yield differential is going to be a big part of the driver for it. I also think countries like Canada, which have a nice yield and are more geographically protected, will attract capital too, because they also are rich in resources. So I think those things will play into their favor as well. So I think you're going to see a lot of money looking for new homes and having to find a new home, and that's going to create a whole different pattern of capital flows around the world. Some of it to China-centric, some of it to US-centric. I think is going to be the safe place is the way people perceive it.
We've got a lot of hands up now. John, Scott, and Rob. Just be quick, please.
Thank you.
Mine's quick, and I think you answered it already in a different way. Real estate, residential real estate, thinking multifamily for yield and capital appreciation. Do you have a sense that maybe it's getting a bit frothy? Steve?
I don't know. I haven't tried to buy a house, but everyone I talk to has no problem selling them. So probably. I think Paul nailed it. I think we have a demographic issue right now with the transition, and factor climate change into that is how people are thinking about their assets. There's a report that came out that basically said, from a climate perspective, most of the world's population is living in the wrong place right now. So I don't know how you factor that in for real estate values, but in the near term, they're going to keep going up because we have a demographic challenge that's going to outweigh the climate challenge in the near term.
I wish you didn't say that. My wife would agree with you wholeheartedly. Thank you.
I think we have an immigration policy issue around the world that people are going to rethink their immigration and welcome them at a much greater rate and very differently if they want to be successful GDP.
So Scott?
Yeah, Stephen, kind of segueing a number of the points you just made, it seems obvious to us anyway, the domestic reproduction, reindustrialization seems like a natural hedge against both China's decision to focus probably on building from within as well to satisfy that kind of volume for export, and then also the supply chain and logistics snafus that we've run into. Is it inevitable, in your opinion, that we refocus on domestic production? And then as a sidecar, obviously my own interest in industrial hemp, which answers so many of the questions, not just from infrastructure, but from construction and also supply chain, being that it can create graphene, which is conductive, it can be used for batteries. A lot of these are rather self-serving, but it can also be a wood replacement, both panels, insulation, engineered beams, and then ultimately rebar in concrete, which is such a carbon intensive industry. So long question.
No offense to the hemp industry, but I think given the challenges in the world right now, Scott, I don't think that's going to be the primary focus for capital flow. I do think all these solutions, I think what you highlighted though, is that there are a million different ways we can innovate to improve things, and that the cumulative effect of those will be massive. Right now, though, I think leaders are going to focus on major problems that they're going to have trouble allocating capital to already, and this is going to put a lot of the burden on the private sector. And I think that's actually one of the big advantages that the U.S. has, is the health of our corporations and our corporate balance sheets right now is going to be one of the things that's going to drive it. And I think there are a lot of European and companies all over the world that have strong balance sheets. I think those are the first place you want to look for investments right now, because this is going to be one that the capital is going to be scarce to make the investments, and those who can make it are going to separate themselves pretty aggressively.
So do you suspect then that the domestic capital is going to fuel the type of infrastructure and reindustrialization that I described, or do you think that it's going to go elsewhere?
No, I do think that's going to happen. What I question is how it offsets the growth challenges that we're going to be facing.
Well, you're seeing it happen, right? So look at the semiconductor industry. You've got Samsung, you got Taiwan Semi, you got Intel spending hundreds of $1 billion to bring that supply line.
You should bring Nancy Lazar back. Right?
Yep. Yeah, Nancy's been.
We should get her for the Midwest tour.
See if we can. We have to give her more notice.
I need some traders to follow her research. But, okay. Rob, Colorino?
Hey, thanks. A great job, Stephen, as always, and thanks for letting me input. Just a quick question for you, and actually, Mark, I want you to confirm or give your different view. How long do you think this is going to be going on between Ukraine and Russia? Is it going to be an occupation, or is it going to be something drawn out? And then, just Mark, just given your experience in Eastern Europe, I'd be curious if you were in agreement or if you have a different time span in mind. Go ahead, Steve.
You want to go first?
It's unanswerable, Rob. To be very blunt, Putin has limited options for what a win is right now, and I think he's got to see it through. I think his time in office depends on a successful outcome, and I don't know how you could even define one, given the devastation that's happened to the economy in Russia right now. So I think we think this has to play out the way Putin wants it to play out, unfortunately, right now. So I think it goes long. And I think you have to plan for it not being resolved quickly.
So I'm throwing up, Rob, on the screen. We've created an asset allocation survey that we're going to do over the course of March. And thank you, Bill Ziegler, for kicking this off. So the questions are like, how do you see inflation this year, going forward, view on economic growth, outlook, there's different categories. But you asked about the conflict, and I think there was a question it was an extra credit question from you. What's your view on the conflict duration? So I'm seeing 8 responses so far, ranging from 36 days, 6 months, end of June, forever, drawn out, months or years. If it continues to linger, Russia will start bombing more aggressively. Hard to see how desperate. So first of all, we welcome everyone to participate in that. We want to get to 50 to 100, and we're going to do a couple more of these sessions. But having said that, you know, I just think interesting comment that how did we have such great intelligence leading up to what the Russians were going to do?
Mm-hmm.
What is that? That to me is it's telling, right?
Satellites.
Well,
No, I think it's.
I think that there's a rift inside the security. They call them the Siloviki, and that you know, it happened. We saw this movie, The Courier, on Netflix, surfing, and around the Khrushchev era, you know, people that thought, you know, we will bury them was scary, and they provided leaks. I think it has to come from within. I don't think the oligarchs have any power. They're getting crushed right now. I don't think that the people per se, but I think, you know, the money will, I don't think it supports this. It's a question of what the security forces will do. And so I don't know if that 3 day, I don't think it's 3 days, but I don't think it's, I mean, it's got to play out a bit more. It's going to get uglier than before it gets better. I think China has a role to play it's in everyone's interest, I think, trying to bring stability. And
Absolutely.
that could be an interesting role for them to play right now. I think they would increase their stature on the world stage. That would be an elegant solve, but you know, there's smarter people that might be a little more informed on that question.
I do think, Mark, the point you just touched on, though, with China's role in this is going to be the key to bring it. If it's going to get resolved sooner, it'll be because of China, and China will be doing it for their own issues, which is social stability. If this blows back to them, then they'll put the pressure on to end this.
Can I add
one comment there, Stephen? Historically, China's reaction to things like this is to go silent.
Yep.
And just go inward.
Yeah.
This would be different if they become active.
Yeah, the reason it might change, though, is because she wants to be viewed
I agree with
as the leader of the world.
This would be something
Yeah.
different.
Yeah.
So I wanted to ask Christian Cernik, who's sitting in Europe, in Austria. You know, has a venture fund, venture credit. We talked about this earlier, revenue-based loans of scaling SaaS companies. But you were the first to point out some of the ramifications 2 or 3 weeks ago, Christian. But how are you seeing the Europe view of the situation, if you don't mind sharing?
Yeah, thank you. Yeah, I was yesterday in the evening. I was in a train from Vienna to Munich, and it was a late night train. I was 3 hours late because the whole train was full of refugees, and it was really sad for me because the war became really, you know, very close. You saw all the children and the families and the women, and it was a tough experience yesterday. But I mean, it's really here, the war, and you can see it and experience it with the refugees now coming to Western Europe. I think that's quite horrible. And then, I mean, from what I learned from my contacts and sources, I mean, nobody is, especially let's say in the German speaking world, expected that this would actually happen. I think the Germans they thought until the very last day that Putin would back off, but he didn't, and so the things have changed tremendously. I think I can recommend everybody a book from Timothy Snyder. I'm sure you know him. He's a Yale professor. He has written a number of brilliant books, but one is The Road to Unfreedom, and that's really a really good book, analyzing also the ideology that is behind the Putin regime, and it's quite scary because it's a destructive ideology. Still, I don't think that he will go all the way. So I don't think there will be a war in Europe, because he's really caught in the past and in the Soviet Union, and he was to resurrect the Soviet Empire, but that has had its borders, and I don't think that he wants to cross that borders also in the future. So I am not worried about that, but still, I mean, it's of course a total catastrophe what's happening there. When it comes to sorry.
No, go ahead. Go ahead, Christian.
I was just gonna ask Mark if he thinks they're gonna cut off the supply of gas or not, if the Europeans are.
Yeah, what's the expectation on the gas supply coming out of Russia? I know that there was a lot of discussion of exempting that, right?
Yeah.
But it's also fueling their economy.
Yeah, I think that's something that was just recently launched now. I mean, the Russians. I mean, the absurd situation is that the Europeans need the gas and the Russians need the money, so I don't think this is going to happen short term. But let's see. But of course, I mean, now when it comes to the impact on the economy and so on, of course, there's a huge now change going on, because the whole energy supply in Europe was based on Russian gas and oil, and that has now changed overnight. So there's going to be a lot of investments into changing the energy supply in Europe, and all the developments and investments related to climate change. So I think that's going to have a huge impact, of course, I mean, there's a lot of investments now in defense and technology in Europe. So I think midterm this will actually have a positive impact, but short term, of course, the crisis is what it is.
MJ, you had your hand up.
Yeah, I just had a question with regard to what's going on with Ukraine and on the backside of what happened with COVID. I'm interested to know people's perspective and Stephen's perspective and your perspective on mental health. People are getting absolutely devastated. They're thinking that there's so much depression. I obviously know what's happening within the addiction community. We are now trying to kind of move out to GDPR compliance for other countries who are just devastated. They just don't know what to do. Investment in the mental health space, because we don't know how long this is going to last. We had enough strain with COVID. What are your thoughts with regard to investment in mental health?
I mean, that's of course an area that's always interesting. I think the situation in Europe, maybe I exaggerate a little bit. It's not that we are all now in collective depression or fear. I mean, that's certainly not the case. But I mean, that's always an area that's interesting to look at.
Well, I think it was probably a broader question you're thinking, MJ, right? To all of us,
Well, yeah. I mean, I've seen a 300% growth in people just thinking that there's and relapse rates in the addiction community just of lucid alone within the last 2 weeks.
Let me share. I'm on an informal. I play on a soccer team with guys that are in their 40s and 50s, and I think everyone has somebody in their family that has had a mental issue that's been heightened by COVID, and it certainly hit our family and we've overcome it. We've been lucky, but because we have we have a village around our family and we've done some things to deal with it. But it's definitely something I want. You focused on this in July of 2020.
Correct.
And I think it's I know that Leslie McCarthy and others want to focus on it more. There's everything. There was a panel we did in November, from the addiction angles, food angles, just wellness.
But Mark,
health.
Mark and
Yeah.
MJ, one quick sort of counter argument is that I actually think because we've come through COVID and what have you, we're a lot stronger. COVID had so much uncertainty, whereas Russia-Ukraine is just driven on, a little bit on greed and a little bit on pride. And it's just something that I think it's we've dealt with this in the past. And I think we're tougher now. So I would just argue a little bit that 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 this will work itself out. And the fact that you've got both economic interests and I think Steve's points about Asia and what have you. It's not that bad of a thing. I mean, the wild card is the nuclear perspectives, but I just want to throw that out there and leave it to you smart people.
No, I appreciate that. I appreciate that, Rob. I was just going to say that the people in this group here obviously are blessed maybe from a socioeconomic perspective, but the people within my community, that are trying to get sober and all, it's very, very different. And so when they're trying to embark on a new life and then they're dumped with all of this, it's a different reaction than maybe the people in this room. So I completely understand what you're saying. It's just different from the standpoint of the affinity group that we're dealing with in the addiction space.
MJ, I would just say that the issues of the pandemic are going to be, this is one of the longer lasting issues, is the mental health issue coming out of the pandemic. I think the reopening was going to help some of the people deal with that, but the loneliness that the isolation that people had actually was one of the contributing factors to the lack of socialization, was one of the contributing factors to the mental health issues. I think the reopening will help that somewhat, but then you have the war and people worrying about a nuclear war and other activities is, it's been threatened. It's more real now than it has been for some time. So I think that's going to create a whole new set of anxieties for people. So I think the mental health issues are going to continue to be high. In periods of high uncertainty, you tend to have periods of real mental health challenges and economic challenges. So I think a lot of the world is going to have some economic issues coming out of this as well that are going to be real issues. So I don't think it's going to get better. I think it's just going to be, more permanent. And hopefully people are going to be more aware and more empathetic when they're having daily interactions, because that's going to be a key part of it.
Can I add?
But maybe if I may add some impact on the European economy, and I think there's also a number of positive impacts. So one thing is, of course, that Europe and the European Union has become more united than ever, and also that the Germans that had a very restrictive fiscal policy and were very cautious about making larger investments in technological development and defense, they have totally changed their policy, and so there's going to be a lot of investments. The Germans just announced they're going to invest 100 billion euros in defense and 200 billion euros just in Germany for remodeling the whole energy supply. So there's a lot of investments coming into the economy.
No, I think I really like that.
Which will have a very strong positive impact on the technological development, so it's not all negative. I think it's also a lot of positive aspects, especially for uniting Europe and making it stronger than before.
So, Mirana, hold your question. John Bellamini just came in with a delegation, so I think he partly wants to make a comment, maybe wants to also introduce some people.
Sure. So my comment is that I'm sorry for being late. So I thought I'd bring a few investors and friends come over and see this great group of 361, which the reason I'm here is because of your support of the whole human. And to talk about investing, our empathy is great, but if we don't invest in the best technology, which is humans, I would not invest in a company that's not investing in their employees, not just by pay, but by totally investing in these employees in a different way. In the past, Goldman Sachs used to say, find the company who spends the least on the employee. That's the wrong way to do it now. So if you're thinking about investing, if a company saying, oh, we're building a product that hurts the environment, we are underpaid employees, and we don't care about the environment. Like, why would you invest in that company in today's world? And if we don't invest in humans, we're going to have people who are, and no offense to anybody on the call, but this trauma around the world, besides the Ukraine thing, is real, it's long-lasting, it's permanent, it psychologically, it physically changes the brain, trauma. It takes 2 to 3 years to work that out if you just had one event. If you had multiple events, long-term loneliness, it could take 5 to 10 years. If you don't have companies that are acknowledging that, they're going to suffer, they're going to have talent loss, they're going to have depression, they're going to have suicide rates, addiction rates. It doesn't matter what your economic income status is. So that's what I wanted to say. I'll get my soapbox.
No,
Yeah, sorry.
all good.
On the crew that's here, we were all at Opal. And I brought some to Opal, but they're long-term friends, they're investors, they're allies, they're fund managers, but they're aligned with the ethics of 360. And I talked about your group for a long time. I talked about bringing people here, so I brought them here to see it live and celebrate your birthday, and it's grateful to be here. Thank you.
Turn 100 today.
Your 100th birthday, right?
It feels like a lot more than 100.
Can I say more? Two quick things. Those who came late, we have a lunch menu.
I sent them down just to get a
Double?
sandwiches.
We're just getting a bunch
We're
of
getting, okay.
We're fine.
So-
We didn't come for the food, we came for the company.
No, I get it. It's just, I think everybody should be back to that healthy lifestyle.
That's fair enough, yeah.
Second.
John, we just ordered a bunch of stuff, John. We just ordered.
We're fine.
So, thank you.
Yeah.
Second, I wanted to point out that some people in our Zoom have also given you accolades because we had the Ukraine crisis, the refugee issues. You brought on a really, important thinker and doer in Paula.
Yeah.
Schwartz, and we've heard that you're the real deal. Is it, you keep on checking out John Bellamy. So thank you for that. We have a tradition where everyone introduces themselves. So can we just make it allow each of you to say?
Well, I want to send the Ukraine thing. It's not me. I'm fortunate to be part of a group of 350 or more people that just are selfless and show up and serve. And it's not about serve to get an accolade. It's about serve to serve. It's not about give to get, it's about give to give to give.
I'm giving you actually, didn't ask for it, I'm giving it to
thank
you. So, I think Harvey,
I run in.
Your name and your company, and what you do. Okay.
I run Presscap Advisors. We're an independent wealth advisory shop with a special focus on helping wealthy people and investors not pay tax.
Okay.
Seth Hummel, CEO, 1913 Media Group, Dayton, Ohio.
In Ohio.
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 I told you, like.
Great state. I'm from Newark. We always say there's no Dayton at Dayton. Oh, it's changed. We'll have to go back.
So we're a end-to-end media production facility, movie studio, working in the pre-sold market, and I'll let Joey finish that.
Yeah, I'm Joey DeFranco. I'm the president and COO of 1913 Media Group, and we focus on helping to tell stories and remove roadblocks for creators and investors alike to be able to.
It's like 100,000 square foot space. It's like a real deal.
200,000.
200.
In an opportunity zone.
Oh, nice.
Great.
Cool.
Hi everyone, I'm Tia Lee, financial advisor, Morgan Stanley. Nice to know you.
And the reason that I met Nicole, and just a dear friend, and an excellent contributor, not like a typical broker, she's excellent.
We had her in Miami.
That's right.
I would never call myself a broker.
That's
No,
right. I'm showing my age there. I'm showing my age there.
There are no brokers anymore.
Oh, okay.
Keep it going.
An older person would even say customer.
Oh, yeah. Keep going, yeah.
Cameron Resnick, I'm CEO at FlyFly. We help people fly international business.
Thank you.
Hello. My name is Anila. I am a founder of the Universe. My company is innovating the technology of crypto, and I'm supporting the female empowerment. So I'm creating the Academy in the Metaverse for 14-year-old girls to create an entry barrier to this industry, much more welcoming. And I am very new to US, and thank you so much for having me.
From a manaverse to an allverse.
Yeah, exactly. I'm just trying to connect these two worlds, you know?
Yeah. And tomorrow we have a diverse allocation because we want more inclusion, black, brown, female led, but happy Women's Day on top of it.
Here we go.
Yeah, you're going to hear more from Amila. I think she's doing really important work, and we're going to be working together. And there are a lot of women that need to get the word out. So,
and who are you?
I'm Nicole Esline. I'm the CEO and founder of Sublime Communications. I'm very proud to say I work with Stephen.
Yep.
I work with Pete. I am very much excited to talk about possibilities with Mark and Angela. We help brands really lift themselves up, tell their story, connect with your target audience, drive, whether it's leads, ROI, but it's about storytelling and brand building.
Hi, Donald Taylor, Sciinvest Capital. I head private equity for a London family office.
How big is it?
Our top family is 100 billion.
Thank you. And he came recommended from a dear friend of mine, so.
Are you doing funds, directs, both?
Direct and secondary.
Hi, my name is Zach Resnick. I'm the founder and managing partner of Unfounded Capital, and we invest in early stage companies building on scalable blockchains. So we're not bullish on crypto, on Bitcoin or Ethereum. We don't really invest in glorified Ponzi schemes. So we like companies that are using scalable blockchain technology to change the world. Raising our second fund right now, $50 million fund.
Come to Omaha with that support, with the whole Warren Buffett crowd. Shares your view.
We saved the best for last, Michelle.
Oh, hi, I'm Michelle Nguyen, and I invested in Peak and Ahura AI. And I'm now with a startup as a psychotherapist and a board-certified mental health and wellness coach. And I'm here to support John and Pete, but while I'm here, I want to talk about my company, Be Rare, that I'm working with, because they have a solution for brain wellness. What we do is we use the technology that is the same as transcranial magnetic stimulation, but we balance the whole brain, and it's developed by a woman who runs a facility, in-house facility for drug treatment, and she found that she needed a technology to help people from relapsing and also with all their mental issues that they went through. So it's a technology where you stimulate the brain, just like you do with depression, but we do it in the frontal cortex.
How long does it last?
You mean the treatment, or?
Well, not the treatment, the effects of it, and does it evolve like adolescence?
Oh yeah, we treat them, we have patients from 8-year-old to 90-year-old because your brain will decline cognitively.
Right.
And so over and then we found that with hormone treatment, we start with the puberty, and there's all these other things that come with hormone imbalance and, you know, depression and anxiety. So if you're interested, I would love to talk to you about it.
Many of us are.
Yeah.
So.
I'm doing it on
Yeah, I was gonna say,
Thursday.
I'm introducing Nicole to do our marketing campaign, because I just love her so much, and I met her through John, and.
Nice.
Yeah, thank you.
Yeah, I'd say Michelle's been a dear ally to me and my company, and she's very humble, but her family's one of the major donors at Stanford, and she's a quality individual, and it's got blessed to have her on my team.
Nice.
Thank you.
Good stuff. Well, where do we take all this new input? A lot of direction. Well, let me summarize what we've done. So we started off, Bill Stoikler kicked off how do we look at what's happening in the world? Now we have the Ukrainian crisis. How does it change our view of investing? So we have the survey. We want as many people to fill it out. We're getting really interesting answers. So it's 361firm.com/asset8. And then we had a PCI session. We had people who taught us about, interesting ways to play private fixed income, energy transition issues. Simon's not here, but he sort of hit how China's innovating, the U.S. is sort of out of the box. That's what sort of gives them hope. But it also sort of pays our penance of our sins of overconsumption. So he's hoping that we solve things. Did I summarize that?
Close enough.
In any close way?
Yeah.
Just say yes.
Whatever you need me to say, Mark.
Who else spoke? Well, Bill introduced it really nicely.
Sure.
People from
Home building.
yeah, we had the drivers of a group that had 6,000 employees. What's happening across the wood product market, and change in demographics, and what else do we have to cover? Then we had the future of work. Gary Bowles, I don't know if he's still on, just came out with a new release. He was joined by Terry Jones, Travelocity founder. Thank you, Terry. We had a future of travel event that will be on Zoom tomorrow. And and then we transition to the 100th briefing. Now we have some videos of some people, and it gives me a chance to show we have amazing content. Let's give you a quick, and so we're partly doing a tribute before lunch comes, and I will share with you my screen here. So we're not through roasting you yet, Stephen.
I remembered.
Oh, Mirana, as I transition, I left your hand up and go ahead and
just want first of all to thank Stephen for amazing briefing as always, and 100 times already is just fantastic. So Stephen, I'll definitely play pickleball next time with you and see those skills as well shining out. But I just wanted to point out to on mental health, a point that MJ raised. Obviously before pandemic, mental health issue was very, very big already, especially connected with young people with lack of sleep, with shortened actually night sleep, and shift workers, and just name it. Now pandemic actually increased that, so now we have 1 in 5 people who are struggling with mental health illness. Now that pulls lots of different issues together as well. So as John also said, by the way, John, what did you do with your hand? I hope it was nothing serious.
What happened to your arm? Your hand?
Oh, this? Did you see that?
Yeah.
No. Nothing, I just slipped, I hit my hand trying to open the door and it just jammed.
Okay.
Nothing.
You gotta get a better story.
Yeah. So I just wanted to say John is 9% spot on in terms of
There we go. Well, the beautiful thing is Mirana is coming up with a device which she promises to have either by Chicago or Ohio or New York conferences. Can you just describe it very quickly, Mirana, before I play this?
Yeah, so I am developing the world's first forward incliner, which is designed for optimal and time-effective rest and recuperation. And it's designed for people with back pain, sleep deprivation, stress and anxiety, and breathing problems, especially post-COVID or long COVID symptoms, because you're leaning in prone position, you're leaning forward. There is no product like this on this market. And we now secured 4 free medical research to be done by King's College Hospital, because we are helping science to finally do overdue clinical research that otherwise was very difficult to do because there was no product like ours. So it's like pressing that button, reset button, for physical and mental decompression every day for 30 minutes to 40 hours or even longer, depending on what you really need. So.
And John, a quick update on Tatiana from last week.
Oh, yeah. So you brought Tatiana from was outside Kiev onto the call. Did you have any on the ground update of how things are going?
Yes, so she's still away from Kiev, and I do speak with her every day just to briefly check in. Not much news apart from what we hear. There is lots of fake news coming out, as we also saw. But overall, they are still good. They're still safe. My friend who's also in Kiev, she's still in Kiev and safe. They have to line up for their food when the supply arrives in between bombing. So that's obviously difficult to manage, but otherwise they're still the same. Thank you for asking.
Thank you.
That's
great that
just one quick follow-up to Marjana's question and sector.
Miriana's always Miriana.
I know, I'm sorry.
Let's all get her name right, because they can all
Miriana.
On a serious note, on a serious note, are you saying that because this is happening in Europe, the Ukraine and Russia, that you feel there is going to be a greater element of stress and mental health? Because that was interesting how MJ brought it up, but I'd be curious because you're on the ground there on the continent.
Well, I'm based in London, so it is Europe. Of course, we are a little bit apart from Europe because of that little channel in between. But I grew up in ex-Yugoslavia, which was bombed in 1999, and obviously all of that leaves the trauma, even with living in or out. It's inevitable. Only depends on how you actually go about that trauma and how you what's the word? How you digest, let's say. So for many people, it is frightening, and people usually only read top news of the article titles. They don't really go deeper in what article actually says, and lots of assumptions are made on wrong and false facts, which is sad because that's consuming or consumable economy, how to call it, where people really don't go deeper into details. That creates lots of problems and also creates lots of mental health issues on top of what's already existing.
Let me just play a video, a bit of a non sequitur, but we're here for
good and valid reasons, and the offering that I'm conveying, sir, is in the form, the creative form of poetry titled The Other 600. The Other 600. 4 stanzas, so hang in. It's short, but full of meaning. On every Tuesday, Stephen earns our sacred trust. For all of us, knowing what to think is an absolute must. And it's been your insights, your knowledge, your putting the pieces together that has made us inspired. And you've done so darn well that you have not gotten yourself fired. Relish what we've learned. You take complicated data and roll it together in a way that we can discern. And the conclusions that we draw from the world and the markets is based solely on what you, Stephen, think and saw. Now, what about those other 600 days? We know that you read, write, study, interview, think hard in order to create the PowerPoint for each week's show. It takes 600 days to create 100 of the pitch, and you have done it splendidly. You've done it without a hitch. Now, how do you know? I think the answer is locked up in Gettysburg College, a liberal arts place where you were trained and analyzed to think in order to gain knowledge. So, Stephen, thank you so much for your recent commitment to doing 100 more. We at 361 are so excited about the 100 of the past and the 100 going forward that are in store. Thank you, sir.
So that was the quickest, the shortest video he's ever done. I don't know, Jack, are you on here?
Yeah, listen, I did that. I did that for Stephen's benefit, notwithstanding any positive reinforcement you might derivatively derive.
Derivatively derived.
And if there's anything you didn't like about it, such as the slow, methodical pace, I have an excuse because I was drugged yesterday due to some oral surgery. So that wasn't the real me. No, really. Hey, drugs.
It would have been longer.
Drugs play a big role in human behavior.
You could have gone 20 minutes without that, Jack. Thank you.
I hope your surgery went well. So I think food is coming soon for some of us here. Again, in the tradition of chiming in, other questions, comments? May go to gallery.
Okay.
I'll call upon you. It's like law school. Richard,
Well,
you're up.
I hate to follow up with Jack. I'll chime. I just said a quick chat message, and I regret not doing my own virtual video, Stephen, tribute. I've only been in the ecosystem very proudly for, well, call it 8 months, something like that. But as a partner with Mark and being in the capital markets for way too long, there aren't many folks that I've come across who do what you do and do it as well as you do. And is also are a nice guy and can hang out socially and play pickleball. Just better than me, I can assure you that. But it's really always fun, insightful to watch your presentations. And I do have a sense of the work that goes on in the background for these things. And it's really extraordinary. Some of these, geopolitical issues going on and how they affect the economy, it is not easy to interpret and present it in the way that you do. I know that. And kudos to you for the ability of being able to do it, and obviously reason for your great success in your career. So kudos. I look forward to working with you further, obviously going forward, as well as 361. But really top notch, my friend.
Thank you, Peter. I'm blessed. I work with an incredible group of people. So the views you hear every week are the firms. And that's the liberal arts education, Jack. What would gotten you kicked out for their honor code violations at Gettysburg, will serve you well in the real world. So I have about 10 presentations I've done the 100 weeks. I just keep moving slides around. So thank you guys for coming back and listening to the same 10. I appreciate it.
Come on. It's somewhat true, actually.
Absolutely. He told me to just fun.
Jack,
Mark,
you wanna speak again?
I'm a little puzzled. Did you give Peter some of my time allocation? Did he take it from me?
I got nothing to say on this one, Jack. I had no control. I just chimed in as he asked folks to do. So I'm good.
All right. Fair enough. Anyone else other than Jack and Peter? And Richard, are you at the office around the corner from us?
Yeah. Hi, Mark. I'm around the corner. Fortunately, I've had quite a busy afternoon with everything going on, but want to echo the sentiments from everyone regarding Stephen. Pretty fortunate to be surrounded by some great folks here at UBS as well. But Stephen, your insight, your perspectives is always spot on and fantastic, and your deliveries have been incredible. So congratulations on your 100th birthday, as John said. Congratulations on the 100th presentation. You're a fantastically phenomenal man, and it's a pleasure to know you and to be part of this association. So congratulations.
Thanks, Richard. Appreciate it.
We got food around